welcome to TraderMerlin Show. It's Hump Day. Happy Wednesday. Hope you all had a fantastic trading session out there and enjoyed watching the popcorn trade of the day, which is that Coinbase Ipo. Of course, we'll look at that here in a little bit. We'll also talk a lot about earnings, but quick shout out. We've got diversified group. I've got Boss Poopa from Raleigh, right? And azaleas. I'm a huge fan of azaleas. I prefer camellias. Those are some of my favorites out there, and also gladiolas, but azaleas also. My neighbors have a huge azalea bush. We also have Les from Cape Canaveral. We got Jeff from Jersey. Sue, I didn't know you're from Boston. Maybe out there in the near future here. Lori V as well. Tom, Big Eb, Josh Lilquist. Good to have you with us. In case you guys haven't checked out his show as well, he's got a great podcast that he does. You can find out more information on that one on Instagram, also on LinkedIn. Just type in Josh Lilquist and you'll see there. And let's see. Tom's comment here. That's a great graphic, Merlin. All right, well, let's bring the graphic up for you guys just so we can see. Putting up my guest screen here. And says, that's a great graphic. The ball comes behind the player, hits his plant foot, and he's chasing it with his kicking foot. Yeah, it's pretty much what's going on with earnings season. It's all the magic of illusion, but it actually, I was trying to find something that would be fun graphic, and it's actually a rugby player, because that's more of a rugby kick, as you guys could probably figure out. And yeah, I decided to put the Chase logo on there. Even though Chase didn't report earnings today, it was Wells Fargo, Goldman Sachs, and JP Morgan. Now, I'm not going to go deep into the financials. I actually think I might save that for the investors channel. You guys might remember we've had Colin Teddards on the program, who runs the investor channel. I might bring him on here to talk about some of the financial breakdowns once this major chunk of financial firms has passed. But bottom line is, one word summarizes all three of these: Wells Fargo, JP Morgan, and Goldman Sachs today. Absolutely freaking stellar earnings. It was one of those numbers that are just blowing it out across the board. So here is the numbers we saw report today. For some reason, that screen is cut off. So let me do this here real quick. What happens is I'm using a different graphic. I'll see if I can shrink that back down. Oh, there we go. Now you guys can see all the numbers because I had it kind of going full screen there. But bottom line, there we go. Okay, so you notice over here on the right-hand side of it, you've got the percent surprise. And that basically is how much they beat earnings expectations by. Goldman clearly leading the way. Goldman had a 510% year-over-year growth on their earnings. You know, we were growing at 40% per quarter as OTA, and that was amazing. I mean, not per quarter, per year. That's phenomenal growth rate. 500% year-over-year growth for Goldman Sachs. I mean, that was a monstrous day. And sadly, their chart really wasn't rewarded for it. It's like, you kind of feel like going, well, what the hell did you guys expect, right? They were expecting $9.79 per share earnings. They came out at $18.60. I mean, this is a monumental blowout of earnings. And look at the price chart there today. Goldman Sachs really didn't do much. And what was interesting is it actually started to show some weakness during the day, making it lower than yesterday, almost lower than yesterday's close. So, you know, when you have earnings that good and it still doesn't pop the needle, kind of makes you wonder and get a little bit nerve-wracking here with regards to earnings season going forward. Because if this is any indication of what earnings season is going to be like, this is, someone just kicked an 80-yard field goal for the win. I mean, this is a huge win to start earnings season. That bar, in my opinion, has been set very, very high here. So let's go through some more of these. We've got Goldman Sachs beat by almost 90%. Now, they were up 2.15% on the day, but the real winner here, price-wise, was Wells Fargo. Yes, we can boo and hiss them all we want. You know, all the shady crap that Wells Fargo has done in the past. Bottom line is they were supposed to come out with 69 cents per share earnings. Came out at $1.05. So nowhere near the blowout that Goldman Sachs had with regards to percentage. But look at the price chart of Wells Fargo. Let me bring up WFC on the other screen here so you guys can see that. Clearly, this was much more well received. Now, the numbers that really spiked Wells Fargo were mortgages. And you're seeing this as kind of the common theme, as I didn't dive deep into the financials on these guys. I kind of skimmed on the surface. And Goldman Sachs, their numbers were incredible. I'll read some of the numbers. I made notes on here because it was pretty impressive. Their revenue increased from $11.97 billion to $17.9 billion. I mean, that is a huge jump in revenue. As I mentioned, 510% year-over-year growth. They cited in there that a lot of it was coming from fixed income, meaning the bond market, because there's been so much action in the bond market, and investment banking. Also, equities. They jumped from 2.4 to $3.7 billion there. So Goldman clearly had some phenomenal numbers, but Wells Fargo really killing it on the mortgage side of things, as many people out here are rushing to refinance or just get new mortgage and buy something else and expand their portfolios of real estate. So that was really the main kicker there behind Wells Fargo. Price chart right now is absolutely phenomenal. I'll take a step back and look at the monthly here so you guys can see the bigger picture. Still has a way to go, but at least over the past 6 months, it's been beautiful for anybody holding Wells Fargo. Not to say that it's all roses from here on out, but maybe some of that, I don't know, overwhelming shadow that they have over them of just how bad they were and some of the things they were doing, maybe shedding some of that negativity, at least with regards to earnings today. Oh yes, Brennan says DeFi will devour banks. Yes, DeFi, in my opinion, is going to completely destroy these financial firms going forward. So enjoy it while you can, Wells Fargo. Things are going to change. All right, so Wells Fargo is mainly the consumer retail. We looked at Goldman Sachs, which is pretty much the institutional side of things. Let's look at JP Morgan, who straddles the fence between both of these. JP Morgan, they beat earnings as well. They were expecting $3.05 per share. Came out at $4.50. So all of these three banks did great number-wise. This one was actually down on the day. Even though they beat by 47% earnings surprise, they were down 1.9% today. So let me bring up the .D over here for you of JPM so you can see. And maybe we can start to look at potential opportunities here. Now, it's tricky for me to say which one I like best out of all these. Over the past, I think we even talked about this at the beginning of the the COVID pandemic, when we had Colin Teddards on the program. We were looking at some of the fundamentals and financial statements, and we all kind of leaned towards JP Morgan as the one to go to, right? It looked like the best of the best. Well, right now that opinion is changing, and I think that there is some opportunity here for those of you who like spread trades and are using options. Notice this range here. Now, granted, we did have one gigantic shooting star spike that was outside that range, but you notice these two little lines I drew on your chart. You're really looking at a price range between, let's call it $49 and $149 and $158. So you've got a $9 spread there. Now, it is near the lower end of its range, but we could be doing spreads in between this range, collecting premium as it bounces back and forth. Now, what is somewhat noteworthy for me is what happened today. Now, they beat earnings by almost 50%. That's a huge plus, right? It should have had some upside move. My guess is people are factoring in that and saying, you know what, it's already priced in, looking at their model going forward and saying, you know what, they did a lot with mortgages. They did a lot of, the revenue was certainly up significant, but it was really looking at mortgages and trading income and fees or some of the bright spots for them. And maybe the analysts are expecting that to slow down, because if we blow out earnings by 50%, why should we have a candle that looks like this, right? This is not looking good at all. So I drew these two lines on here, and I'm going to see if I'll try to save the layout. I always forget to save this layout, but we'll revisit this because I have a feeling you're going to see it oscillate back and forth between these ranges, and most likely, in my opinion, ultimately break this to the south side, all right, and start to see some downside move and potentially close some of these gaps that you see from back in February. Maybe I'll even put a line on here so we can kind of draw some target. There is the gap I kind of think it might fill here on JP Morgan. So even though their numbers were great, it looks like the weaker of the bunch right now. Correct, Lori. 100% agree with you. And this is why you always hear me tell people, don't trade earnings announcements. There's this young guy I know from the dog park, and he's younger. He doesn't really know financial markets that well. And he's been chatting me up every day. I try not to tell the extent to which I am involved in the financial markets, because then it just strikes up conversations I really don't want to have as I'm throwing the ball for my dog. But he's got like 8 things in his portfolio, and almost every one of them is an earnings play. He basically buys something and hopes that it pops on earnings. And I'm just kind of going, you're getting lucky, kid. You're really getting lucky on some of these earnings. It's a crapshoot. You saw all 3 of these banks today reported unbelievably phenomenal earnings, yet JP Morgan was down 1.9% today. And if that's the case, it looks like it might get weaker from there. So yes, I agree with you. You can't depend on earnings correlation to movement. No way whatsoever. But we can get a clue as to the strength or weakness, right? Remember, earnings announcements for all of us, and I'm lumping myself in here as the retail investor or trader, it's a surprise. We don't know what that number is going to be. Now, for the CEO, CFO, a lot of the major financial firms who are intertwined with these banks, They know what the numbers are going to be. They've already got a handle on it, and they've already built positions around it. Yes, that's insider trading, blah, 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 blah. Insider trading doesn't exist, blah, blah, blah. It absolutely exists 100%. It's just not on our level, right? So when we see something like the JP Morgan, this is probably the most noteworthy chart for today, and I'll run through all three of them again. I'm looking at this chart, and I'm going, man, you have that big of earnings beat? To me, this is really reeking of weakness. Because there's no way you should beat earnings that good with revenue. I mean, the revenue went from 30 billion to 33 billion. That's a 10% increase in revenue. I mean, that's pretty significant. So, yes, Jeff, I did say I'd throw the ball. Oh, throw the dog to my ball. Did I do that? Well, you know what? He's 105-pound German Shepherd. I'm not throwing him very far. I'll put it that way. If I did, I apologize for my momentary dyslexia, Jeff. Yes, and again, Brendan says, but share prices have been under attack. You know, look at the price chart of this for longer term. Let's go back to the monthly here. Okay, with the monthly on JP Morgan, you're looking at a price chart here which is almost screaming at me. You take out the pandemic, you take out any other factor, and just look at what's happening with price. JP Morgan looks like it wants to sell off, and it looks like it wants to sell off aggressively. How do we know? Two things. The previous month, so if you look at this monthly chart here for March, you have a pretty big shooting star. You guys might remember a shooting star is where you have a long topping tail, right? You guys, I'll zoom in a little bit more here. Maybe that makes it clear for people at home. And let me move it down to put it in the center of the screen. How about that? Okay, so I'm looking at this guy right here, this big long topping tail with a little green one, right? And it didn't close at the bottom of the range, but lower in the range. So it's not the best shooting star, but it also had volume that was higher than average. That's after a significant run-up. I mean, you guys can see the run-up that happened. That was a pretty big run. We'll go from that candle to the peak. 64% gain in 5 months for JP Morgan, right? That may be pricing in the expectations of just stellar price movements going forward. So you had that shooting star last month, and if you guys remember, we had Bob Dunn in the program, and one of the things Bob says is, look, when you see a monthly candle close with a shooting star, that presents opportunity. That's a potential shorting opportunity, but you have to wait for confirmation. We never got confirmation of a break below the low of March's candle. Now, we are, halfway through the month of April, but you guys can see this little low point right here. I'm going to add another line right across the lows here, okay? I think it's on snap mode. Yes, it's on snap mode. Perfect. And I'm going to make that a red line, and we'll keep that there going forward and look at it maybe over the next couple of weeks because if you guys remember, I'm colorblind, so it could be challenging. All right, so that red line is the low of the April monthly candle. Now, again, if you're using someone like Bob Dunn's strategy or some of the other confirmation strategies, you're really waiting for price to break down below 150.93, okay? And you should be waiting for this candle to close, but we could be anticipatory here and jump on it sooner. Bottom line, I do think that there's some good weakness in JP Morgan right now, and I ultimately I would probably say you're safer to go short once it breaks down below 149. But that's obviously giving up a couple extra bucks there on this one. Trend line across the monthly tops, indicate toppings. Well, I just put that line across the top to kind of show they're kind of relevant highs, right? You guys can see the high we hit 3 days ago on JP Morgan versus the one that we saw going back to, let me turn that off, going back to the 12th of March. There is this one candle, a beautiful shooting star on higher than average volume, which did rip through that area. So I'm not calling this a strong supply level at 157. I'm just identifying the normal ranges. And I think that this is important for all of us. It's not to say that something can't go past an area, whether that's the upside or downside. It's really just saying, has it done it in the past, right? Where is it? Does it seem like it's stuck in a specific pattern? I mean, look at our day-to-day lives, and many of us are stuck in a particular pattern of we do this, we wake up, brush our teeth, we go have breakfast, we go to work, we come home, we throw the ball to the dog, or dog to the ball, and these are our norms, right? We're stuck in boundaries of what we do. Price is very similar because price is the result of human action, human behavior. My thoughts and emotions, your thoughts and emotions are reflected in what goes on with price, and quite often they get stuck in patterns, and if those patterns can persist, then why not make trading investing opportunities off that? Now, the chart we were looking at here on JP Morgan, I like it. I like that we're pretty much traversing sideways for a month and a half. Great. Sell the highs, buy the lows, or do spread trades and go for the middle of it. Right, that's pretty much it. So, Mike, I wouldn't call that a trend line across the monthly top. Oh, monthly tops. I'm sorry. I thought you were talking the daily. Let me go to the monthly. Oh, Thomasina, good to have you. You missed a lot. Trend line across the monthly tops indicate topping. Well, you know, normally you wouldn't draw. Okay, so in an uptrend, just for those that want to like get proficient at trend lines, if you're in an uptrend, you don't draw trend lines across the top. Right, the trend line should be across the bottom because that is where the trend line would be broken. If you're in a downtrend, you draw a trend line across the tops. And that way you can see when that downtrend is broken. So you really wouldn't draw a trend line here, but you know, for entertainment purposes, you know, where would you draw that one here, Mike? Would you go through here? I'm on snap mode again. Turn that off. You know, would you look at something like that? You know, I personally really wouldn't put too much emphasis on that line if that's what you're referencing there, Mike. Doesn't put a lot of power behind it for me. What really is important are those two candles, right? Those two candles are shooting stars, and those are generally indications of weakness. And when you have weakness after such a big run up, you know, could we see this very easily fall back to 140? Absolutely, right? Absolutely could fall back very quickly. Now, that was JP Morgan, which was the worst performer of the bunch, both from a earnings beat and from a market performance today, down 1.9%. How much time we got? All right, 17 minutes. We could do this. So, next one is the GS chart. This is, on the daily chart anyway, somewhat similar to what we saw with JP Morgan, although it's not as clear, right? It feels like you have a tighter range here on Goldman Sachs, although today's tail ripped us right out the top on climactic volume. What makes this noteworthy for me is, again, simple relationships between volume and price action. You have this really high spike up here in volume, and we were almost triple, which is normal for an earnings day. But did price really have that big of a reaction? It did, but it gave up the ghost at the end, right? It ended up with an up day, which was great, to 2.5%, but nowhere near what it was up on the day. So for whatever reason, weakness stepped in here, and of course there was some weakness overall in the market. You know, NASDAQ and S&P and Russell all showing some weakness out there. Oh, S&P and NASDAQ showing some weakness, but the way that this finished is not very optimistic, and it feels like we're back into this tighter range here between 323 and call it 326. Now, the last one here was WFC, which, you know, this is the hardest one because there isn't any real zones or levels for me to play off of. The only zones I can look at would be from, you know, years ago when this market was in an absolute free fall. Right now, especially if we look at the weekly, it's looking stronger and stronger and stronger. Great. You know, where's your next like major area of stopping point? Well, that'd be right around 48. You can see this origin of this huge sell-off here that happened back in 2020 due to the pandemic. But we're still getting our feet back on the ground for Wells Fargo, but it does look good today. Tradable-wise, I like JP Morgan the best out of these three. Shooting stars showing as a Harami as well. Well, on JP Morgan. Oh, I see what you're saying. Could you look at those side by side and say that they were a Harami formation? Let me go to the daily. So no, shooting stars showing as a Harami as well on JP Morgan. So no, I wouldn't call that a Harami formation on JP Morgan. Definitely not. A Harami formation is going to look a bit differently. Let's see if I maybe find on another one. Yeah, I don't really see anything here that's a great example of a Harami. Let's go to WFC. No, nothing here. Like, there's one down here. I'll put a circle around it to give you an idea of what might be a more clear Harami. In this yellow box, this is a bullish Harami. Even though that second candle is red, it's within the previous day. And it's after a downtrend. So that's where I think most people will be looking at it as a Harami. Oh, you're talking weekly. Okay, well, sure. I thought I saw daily. So let me go weekly on JP Morgan. Why not? JP Morgan, and then we'll get to some other stuff. Yeah, I would say no. The reason I'm going to call that a non-Harami is because you see where the red candle starts here on this week's trading action. It doesn't engulf the previous candle. This needs to engulf it totally. And some people will use just the tails, right? So if you just use the tails, the wicks, whatever you want to call them, shadows, yes, it could be considered a bearish harami, but for me, the body has to be the piece that eats the entire previous day. So in my book anyway. How we're doing monthlies? Lisa, you're getting the rundown on all the different charts here. We've done it on the daily, we've done it on the weekly, we've done it on the monthly. Yeah, I guess you could call that a harami formation, but more important for me are those two shooting star formations. Those long topping tails tell you that it's starting to lose a little bit of strength, right? Doesn't mean it's done, because notice here we had some long topping tails a couple months ago and it kept on rallying, but it's one of those signs for me anyway where I might want to start thinking about maybe lightening up my position and going the opposite direction. That said, I know I'm going to get some hate mail from Tom and Big Ev and Brendan. I unloaded over half my Bitcoin. I unloaded 100% of my Ethereum today. I unloaded 100% of my Litecoin, my Monero. Because the run-up that's happened, I was hoping that today would actually be more of a follow-through to the upside. Given the hype around the Coinbase IPO, which we'll look at here in just a second, and the gains that have happened over the past couple of months, it was one of those moments where I went, you know what? I am not going to let this all of a sudden slip away. I think we're going to have a correction in the crypto space followed by another big leg to the upside. So I'm actually unloaded over half my portfolio to buy back in at a lower price. And I'll disclose to you, let you know when that is. Part of the reason that I'm doing this is I want to maintain the exact same balances in my portfolio. So what I'm doing is I'm selling things high, and then I'm going down towards, once it drops back down, which it most likely will at some point, I'll buy back in, and then all the difference that I had saved, I'm actually going to be putting that into yield farming and testing out some new strategies out there, which are just going to blow your... It's ridiculous what some of these places are offering. I was doing some research last night. I'll just, for giggles out there, let's see if you guys can type in. The average rate of return for your savings account is 0.1%. The average for a CD right now is, 1 to 2% per year. What do you guys think? And I'm just going off one of the higher ones that I saw. What do you think would be an aggressive rate of return for a year, right? Or an aggressive rate of, so you're going to put your capital in this combination of cryptocurrencies. What do you think would be an aggressive rate of return for 1 year? Go ahead and type it in the chat. 50%? Would that be crazy? Would 100% be too much? What do you guys think? When I saw the numbers, I couldn't believe it, and I will show you more once I play with it. I'll be doing real money, so I'm not going to dive too deep into it yet, but I want to test some things out before I show it to you. There are some pretty phenomenal things. So what do we got? Nobody in here says 8%? Man, that's 8%'s nothing. I'm getting that with my Polkadot right now is getting 12%. So 8%, that's a drop in the bucket. Okay, now Brandon's talking 2,000%, right? So a lot of you guys are thinking, Boss Poopa says 11, Tony says 25%. What would I tell you? 27%, 30? Okay, I love the numbers. And those, and I'm looking at some of those numbers, and I don't think that those are actually that aggressive. The 2,000%, I'll give Brendan, that one's pretty aggressive. I found one that if I deposit this combination of cryptos, which I will buy those cryptos, deposit those in there, it's going to pay me 6.4% per day. So 6.4%, I believe I was talking to my colleagues out there today, the law of 72, right? That things double, so we go 72 divided by 6.4. That means that I would double my account every 11 days. Which seems inconceivable and ridiculous. However, I'll put $1,000 on the line and see how that works out for us. But yeah, 6% per day. I think the ultimate compounding rate of return there was something like 500 million %. It was ridiculous how this rate of return compound stuff is. But some of this staking stuff is crazy. Jeff, is this legal and insured? Is it legal? I don't know. Is it insured? Absolutely not. No insurance company in the world is going to back a 6% per day rate of return. Come on. But you know what? What if I get it for 3 days? I make 18% on it for 3 days, and then because rates are constantly changing. I'm with you, Algebra. I don't believe it either. But there's hundreds of different combinations of cryptocurrency and token products that can pay you 100% a year. Right? And those are abundant, 300% a year. It's not out of line. It's pretty crazy. Yeah, right? 5 million% rate of return, not bad. Yeah, I'll take that one. Someone's like, hey, how'd your portfolio do last year? I'm up, 4.8 million%. It just seems crazy. Yes, Mike says that the Bernie Madoff fund. Well, here's the kind of cool thing with these. And then I'm going to get to the Coinbase IPO real quick. When you look at DeFi, decentralized finance, I'm going to show you a graphic here, which is phenomenal. And I'm working on a lot of stuff for the course I'm building for Online Trading Academy. And part of it's going to be talking about decentralized finance. And I make the argument, I know Brendan is going to be right there with me pounding this drum, that we are on the edge of a revolution in the way that things are done. And for many that don't understand cryptos and are probably tired of me talking about it, I'm not just talking about cryptocurrencies. It's digital assets and the way that markets function. I'm tired of keeping money at Chase getting 0.1%. I'm tired of putting money with a financial firm and getting, 5, 6, 7% rates of return. I'm tired of having to go to Geico or State Farm to get insurance that is going to be overpriced because they spent so much money in advertising, I have to pay for that. So here's a graphic I think you guys might find interesting. Most of you have no idea, and now I don't mean to sound condescending, but you have no idea about the vast majority of these companies. Most of you have never heard of Jolocom or Selfkey or Nexus Mutual or IX Ledger or Ampleforth. You've never heard of Daxia or Lendroid or Centrifuge or AirSwap. You have never heard of Melonport or BrickBlock or Xerion. All of these companies are attempting to disrupt the mainstream centralized financial entities. So look in the upper right-hand corner. You guys see it says insurance, Etherisk, Nexus Mutual, IX Ledger, Vouch for Me, AI Gang. These are all companies that are really going after Geico and all these other firms. To me, that was, Big Eb, thank you so much. I'm glad that you're in it. I'm glad that you enjoy it. And I'm even happier that you are reaping some rewards for your crypto. So thank you so much for that, Big Eb. I appreciate it and all your support over the year. I would say years, but it's been a little over a year. So thank you for the support. But you guys see the areas we're in here? There's credit and lending. There's know your customer. So I actually own Civic. I bought Civic about 4 years ago. And Civic is an identity token, right? All of these are only projects that are on the Ethereum blockchain. But look at payment systems. You have custodial, investing firms, liquidity and exchanges. I want you to focus on this liquidity one here for a second and exchanges. One of the big challenges that a lot of us have right now is going to open an account and it's KYC, know your customer, right? I need your taxpayer ID, I need a driver's license, I need your social security number. Hell, I probably need a urine sample and a blood type here soon, the way that these things are going. What's crazy about this, and I'm going to be playing with a lot more, is I can go to somebody like Uniswap or IDEX or AirSwap or Fork Delta, and I can go in there and deposit my tokens through a wallet. I'm using MetaMask right now. I can deposit tokens there. I can swap them out for anything that exchange offers, and I'm not being tracked like I am on a Coinbase or a Kraken. So if you want to be moving money around, great way to do it, and staying decentralized where it's not the know your customer, here's the limits, you can only pull out 500 per day, or you got to do this, and hoops you have to jump through. It's much more liquid and decentralized, which to me is the future of where these markets are headed. Now, there is one that was on this list, and so again, these are all projects that are on Ethereum exclusively. Exclusively. There are a lot more than this on blockchains like Binance. Binance right now is a huge competitor to Ethereum. They're actually booming right now with products and derivative products. You see here in the middle, there's one that says derivatives. These are all companies that will offer digital futures, digital options, digital forex, digital assets that you can use leverage on. It's a new world, but this is all stuff that's coming out. And why is this so important? Why am I sharing that graphic? Well, I think that what we saw today was a watershed moment. Now, you guys all heard me talk about why you should not be touching Coinbase today. Leave that crap alone until it settles. But it did have its IPO today, and it took a long time. Because it was a direct listing, in theory, the argument is that market makers need more time to figure out what that fair market price for it is. Now, a couple weeks ago, they were talking $100, and then all of a sudden it jumped to this morning, the market price was $250. That was the first trade, should have gone off at $250. That's what they set the value of this company is. Well, let's go over here and check out COIN. Hey, Bobby. Competitor to Ethereum? Both. So Binance, so this is a great point. Binance is, and Brendan, I'd love to get your thoughts on this one. Binance and Coinbase at face value are exchanges, and they're going head to head. In the long run, I mean, I like Coinbase because it's got more rules, it's got more regulations, and it's in America. I'd rather take Binance. I think that Binance is doing more for the industry. I think Binance has more products. I think Binance has got much more vision. That said, I think Binance has a lot less regulation and restriction. Coinbase is being limited, I think, at this moment. They're a little bit scared. They wanted to go public, so they had to kind of mind their P's and Q's. Binance doesn't have those restrictions yet. So at face value, I like Binance better. The difference here is Coinbase is not a blockchain. Coinbase peddles digital assets. Binance has their own blockchain. So if you look at somebody down the road to take over the whole digital asset space, like who's going to be the big dog out there, the Google of it all, I'm going with Binance, and BNB coin would be a way to buy into that. Brendan, what do you think of that? What do you think? Because I know Brendan's a big fan of Binance, and you know those guys are spending tons of money all in, not just for the exchange side, but also for the blockchain. And they have their own programmable blockchain competing directly with Ethereum. And now, it used to be everybody had to pick Ethereum. It was pretty much the only one. Now you have alternatives, right? You've got Neo, you've got EOS, you've got just different blockchain, Binance, that people can plug into. Ethereum is still number one. Let's see, Brendan says Binance has a bigger global footprint, more licenses in more countries, and a digital exchange, smart chain. They're just they disrupted themselves. That's pretty funny to say that. But I think on the grand scheme of things, I think Binance would be the better go, but we're not going to have access to that one unless you buy BNB. So let's take a peek at the Coinbase IPO today. I put a line across here. For those that don't know, this is what an IPO looks like. I got nothing. I got one candle. Let's go to the daily. Oh, I still have one candle. So we go to something like the 5-minute chart. Dot 5. Oops. I'm forgetting what platform I'm on. So there's what you had going on with Coinbase. And this is exactly why I talked about not getting involved with Coinbase today. Why? Because it goes back to the wonderful graphic that Tim created for me, which is the chart looked just like that. Did I not say it would look like that? I think it looks pretty similar to that one with regards to the popcorn trade of the day. Lots of volatility in the opening little bit of the market. It spiked up, right? It went from 380, shot all the way up to a high of, let me get that exact number for you, 429. In a period of 10 minutes, and then did nothing but sell off for the next few hours, and now slowly gaining its footing and coming back up. Yes, this is one day, right? You can't really dictate or tell a lot by one day. What's noteworthy for me is if you look at where the market makers, the institutions price this at, it was 250. So I'll put a 250 line on this chart, and we will make this bad boy bold and put it in big red. I'll make it red, make it real big. So in the future, we'll keep an eye. I'm going to do a giant line. Okay, you can't even see that line. You know why? It's so far off this screen, right? That's where the institutions in the market priced Coinbase. So what you're looking at here is a premium that's being paid by the retail investors, in my opinion. Retail investors paying a premium to jump on it, which is why I said don't touch it, right? For a while, in a direct listing, there is no lockup period. If it's a traditional IPO, there is a lockup period, which means that insiders can't sell their shares for a certain amount of days. It's 30, 60, 90 days, depending on what's written in the contract. But with a direct listing, they can sell right away. So, if you're looking for a fair value on this one, I'd be waiting for it to get back to 250. And even there, I think might be, pricey. It's still 250. But all in all, it was call it a great day for the IPO of Coinbase, which was a direct listing today. Yep. And Brandon says the day of a direct listing is an awful time to buy. And I would contend that the day of any IPO is an awful time to buy. Remember, the whole job of Coinbase and anybody who's been in their ecosystem has been to pump Coinbase over the past 6 months. Because the more people that get excited about this, and it's part of the reason we talked about on the show over the past couple weeks, has been it's the hottest sector. Cryptocurrencies is super hot right now. Where can you go get them? Coinbase. It's the only exchange in town. Great, let's go buy that IPO. So a lot of people, especially I watched some social media stuff today. There's a couple that follow me on Facebook, and they think that they're all geniuses because they bought some crypto, but I can tell they don't understand it very well. They just made money. They're talking about jumping all over Coinbase, and why you need to buy it right now on the open. I'm like, okay, well, if you bought on the open, you're down $40 per share right now. Diamond hands, I'm holding forever. Good luck. Kojas Y250. That's just what the analysts expected based off their numbers and their financials. That's beyond my scope of understanding. Not understanding. I understand financials. I understand fundamentals. I just don't care. All right. I'd rather just look at the price charts and tell me what to do. So I'm going to go to a listener question here. I'm hoping I actually have this one prepped because there's a lot of other stuff I was supposed to get to today. There's a bunch of really good questions that came in today. So what time do I have? All right, I'll get to one or two of them. Here is the question that came through that ties into this from Chad. And Chad, thank you for the question. It says, in general, what are your IPO trading rules again? If I recall, they might be something along the lines of not trading them. But if one really wanted to, for whatever bias one would have, they would be something like this. And this is Chad's thoughts, not mine yet. So let me read his, and then I'll read you mine. He says, the first day close should be higher than the open and expected valuation. The first day could establish a range for possible demand entry, i.e. if price pulls back and then recovers, the pullback area could be a sign of demand. Some other instructors might have a rule about if it closes 2 weeks higher than it opened, then it's bullish. We could go on and on and on and on and on about the different rules. My simple answer here is don't trade them. You just don't know, right? It's all hype at this point. I would rather wait a month, 30 days, to let at least some price chart action form. Let me see where the institutions might be buying Coinbase or whatever IPO it is. And you're probably thinking, well, 30 days, I'm missing out on so much opportunity. Who cares? There's so much opportunity in the long run. Could you have day traded this one today and done well? Sure, you probably could have had a great day. However, you can't short sell this one yet, or you most likely won't be able to short sell this one. I can't say you can't, but most likely you won't be able to short sell this one. So, my rules, Chad, are very simple. Don't trade it. Leave it alone. You just don't know. It's just all emotion and trend, which there was some nice intraday trends. But if you can't short it, how would you have made money during this sell-off that happened 10 minutes into the market for the next hour or so? Not into the market because it's opened late in the day. So no, just leave them alone. It's exciting. If you want to buy Coinbase because you think it's the greatest company ever, wait. What usually happens for an IPO is the opening week is really strong, and then all of a sudden it starts to drop and drop and drop and drop. And after about a month, prices have really sold off as all those people who were in it early took their profits. Then that might present an opportunity for you if it's coming into an area of demand or if it's at a price point that you feel comfortable buying at, that you could buy something for the long haul. Also, shorting rules start to change after a certain period of time as well. There might be more supply available for companies to loan you shares to short as well. Okay, what else I got? Yeah, VIH crash. Well, if I call it crash, it definitely had a pretty decent sell-off at 12% today. It was funny because it was up at 16 yesterday in the aftermarket. Here's VIH. As far as why I did it, I don't know. I don't know. I'm still holding. An ugly day for it, but we had a huge gap up and then all of a sudden gave up the ghost. I haven't read the news on VIH. But when you see a move that's this dramatic with that much volume, there's most likely something happening that I'm just not aware of, that I haven't seen yet. But I'll look into that rabbing. I've just been slammed with a million other things, and it wasn't high on my radar. Big Eb says, Merlin, when selling your crypto, like you mentioned today, are you offsetting the taxes on those large gains somehow? That's the big question, is the whole tax thing. No, I'm not offsetting that. I'm okay to pay it. Yeah, I haven't gone through the whole tax process yet. Part of my thinking is I will probably do mark to market, which I'll have to talk to my CPA, but right now that's still a wild card as the whole tax scenario. Part of me just says I know every single penny I put into it, and I know where all my balances are right now. So part of me just wants to just go to the IRS and say, here, if you want to audit me, go for it. You're going to have to find these things because some of the exchanges that I've had cryptos on are gone. They're disappeared. I can't even log in or get access to them anymore, so good luck. And they didn't even keep records. So I don't know what was done. I made hundreds and hundreds and hundreds, if not thousands of trades to learn this stuff. So yeah, I don't know. I'm not worried about the tax gains. We'll figure about that when I finally sit down with my CPA. What else do I got? Why are you anticipating crypto correction? Earnings season started? Yes. It was a tough one for me, Raving. It wasn't just that I still think that in the long haul you're going to see cryptos go up, but I've experienced some, we'll just say, significant gains in the past couple months that I just don't want to have slip back. You know, there was this big run up to Coinbase, and if you notice that one of the big moves that happened in crypto was really right as Coinbase was coming to their IPO. So for me, it was almost a buy the rumor, sell the news type of event. So I expected it to sell off. We'll wait and see. I don't know how much lower I'll let it fall. I mean, right now I'm not looking at I'm not looking at very low prices, so I'm pretty much break even from where I got out at this point. But you know, the wild card for me in this is, are earnings going to be starting to put more cryptos on their balance sheets? If they are, who is, how much, and what is already known about that? I just have a feeling you'll see a minor pullback. I'm not saying a collapse. I'm not saying, you know, Bitcoin's going to fall from, you know, 62 down to 30. Absolutely not. But can we see it drop back down to, let's say, 55? Sure, that's 7,000 extra bit worth of Bitcoin, $7,000 per Bitcoin extra I can put back in my pocket. Not to mention something like Ethereum. I mean, look at Ethereum's price chart. Let's see if I can bring that one up for you guys here. Let's go to Ethereum. Here is ETH, which lucky for me is selling off a little bit. Here is the Ethereum 2410, right? So here you got a 2410, so it's a little higher than where I jumped out at. But this is the 1 minute. If you look at the daily, you know, my jump out point is like right here. I don't feel bad about that at all, because could it drop down to 2100? Without a doubt. It jumped up so much in 2 days it could easily pull back. Yes, ETH is still ripping, I know, and I had a pretty sizable position. But you know, could it drop to 2000? That wouldn't even seem like much of a drop at all if it did. Right, so you know, it's tough. I think I'll probably end up going, I wish I stayed in it, but it wasn't. I just don't want to give up any of the significant gains I have. I need to enjoy some of that. Like I said, the gains have been pretty unbelievable. So, what is the symbol for X? Yes, this symbol for XRP is Ripple. Or Ripple is XRP. I'm really switching things around. Here's your Ripple chart. The problem with this, Mike, is you really can't buy Ripple right now. Most of the exchanges aren't going to allow you to do it in the U.S., right? You could buy it on other exchanges, but it's pretty much frozen in the U.S. because of the SEC investigation. But it should be back online soon. I might have seen this one. This whole stupid Dogecoin thing just went nuts today again. This is one I do not own. All right, what else do I got? When you decide to sell and happen to get involved with the IRS, I would definitely love to... Yeah, Louis, I might need you to come bail me out, right? Hey, can somebody come bail me out? No. Anyway, quick thoughts on XRP, although I'm sure you've covered lots. Yeah, my thoughts are, the challenge with Ripple, and I know others here disagree with me, that's totally fine. Disagreement is a wonderful place, just keep it civil. Ripple is challenging a legacy system, which is the payment network that really is called SWIFT protocol. And SWIFT is basically, you want to send money from here to Australia? Great. You go to your bank, you fill out all these forms, you have to show all kinds of IDs, etc. It's a pain in the butt. You can send that money, but it could take a few days to get there, and the fees are very high. And there's a potential for these things to get lost. There's reports of SWIFT tracking getting lost. Ripple stepped in here and says, listen, we can do the same thing, but we can do it without all the necessary paperwork and literally just say, I want to send this much to here, hit a button, and it's done. It can be done in 4 seconds or less. It has very minimal fees. So they're actually presenting this system to, you know, financial interests around the world, central banks, going, look, we can do this, we can do this, we can do this. My feeling is that the central banks are going, that's great, we love it, but we'll just make our own, right? We'll hire some people, we'll get some organizations in here, and we'll make our own, which is going to be the Fed coin, and I think ultimately that's what will end up happening. So Ripple's prospects, I think, shrink down a little bit. If Ripple's smart, they're taking the billions of dollars. Keep in mind, there's 100 billion Ripple in circulation. Now that's trading at about, let's call it $2 just to round up. That's $200 billion. There are still 55 billion sitting with the organization, which means they now have over $110 billion of capital to work with. So I'd be building big infrastructure projects. I'd be hiring on new developers. I'd be diversifying my holdings in that crypto space to help solidify my situation here. But I think that their goal to be the remittance payment processor for the world, it's a lofty one. I still hold a sizable position in Ripple. I have got about 25,000 Ripple, so I'm happy with that. But I think long term, that business they're looking for could be threatened. Brendan says, I'm holding on. Yep. Well, and that's the challenge, Brendan. He says, I'm sitting on open gains of over 15x holding. It will go up higher. It probably will. I mean, in the long term, I think, yes, it will go up. But I do think you're ready for a pullback here, and I could be totally wrong. All right, let's do this. I'm going to wrap things up and go to Manana's show. I don't even know who my guest is for tomorrow. I think I might actually have Sean Reed on the program, but we said Thursday, but I'm not sure if it's this Thursday or next Thursday. Here's what I've got cooking for Manana. This is actually happening tonight, okay? So for those of you who are trading Australian dollar, you might want to keep an eye on these announcements. The Australian dollar had a big old spike the last 24 hours to the upside right into an area of supply. They come out with employment rate numbers and inflation expectations. And then for the euro, you have some CPI data for Germany and France. That's happening later on this evening. Now, tomorrow, here's your economic calendar. You don't see quite often this much going on in the U.S. There's a lot happening. I'll read through the U.S. stuff here. It's going to be like the credits for a movie, like Lord of the Rings here. You've got retail sales, which is probably the most important number. Guys, the previous month was negative 3%. They're expecting 5.8, which is a big jump up there. I think that might be a little bit over optimistic. You also have Philly Fed manufacturing claims, Philly Fed manufacturing index, Empire State Manufacturing Index, unemployment claims, capacity utilization rate, industrial production, for the U.S. business inventories, natural gas. I mean, it is a huge list of stuff happening tomorrow. A bulk of that is going to be happening before the market opens, which is great. And for others, what else we have? I think the British pound had CB leading in. Yeah, there's CB leading index for British pound. And Canada, 5:30 in the morning with manufacturing sales and non-farm employment. Now, on the economic calendar, earnings calendar for tomorrow, we continue on with the big banks a lot. Bank of America, you have Citigroup, you have Progressive, you have BlackRock, and U.S. Bancorp reporting earnings tomorrow. Almost all of these are going to be before the market opens. Will be interesting to see companies like Delta Airlines to see what they've been doing. You also have Alcoa, Pepsi, United Healthcare. I already mentioned Citigroup and Rite Aid reporting earnings tomorrow as well, and that wraps up your earnings calendar. Now for the economic calendar, I already did that one. I already read that question. I already got the economic calendar. So that's it. We had quite a bit of stuff going on today. Pretty exciting. I love the fact that these three banks came out with very, very good earnings. I'm a little suspicious on why we didn't see a bigger reaction from the JP Morgans and from Goldman Sachs. Wells Fargo looking fantastic, but I'll keep my eyes on JP Morgan over the next few days because it just feels like it's getting weaker and weaker. And if we start to see some numbers falter from other financial firms or companies over the next couple weeks, might see a little bit of a sell-off here, which I think is probably long overdue. As you guys may have seen, that S&P 500 just roaring and continually roaring. Today was a little bit of a sell-off, as you guys can see right here. Here's your S&P. Nothing but green candles, green, and a little bit of a red one right there. But nothing noteworthy yet, but just maybe setting up for a little bit of a correction here. Cool. That's going to do it for me, everybody. Hope you enjoyed today's show. I didn't really have too much prep, so hopefully it came across as well prepared and well thought out. If you enjoyed it, do me a favor, give me a thumbs up. If you didn't, well, that's okay too. You can always email me and let me know what you were thinking. I did get a bunch of listener questions emailed to me. I'm going to try to sprinkle those in the shows over the next couple days here, but that's the way you can get in touch with me. TraderMerlin@gmail.com is the easiest way to get contact, sending questions, positive feedback, negative feedback, and of course guests, which Brendan, I know I got to get Marino on here to talk about markets going forward. We'll get some new guests. Anyway, that does it for me, everybody. Hope you have a great day out there tomorrow. If you're trading that Coinbase IPO, careful. It can be a wild one still tomorrow. There's a ton of volatility out there. I'll be watching that cryptos, and we'll talk to you guys tomorrow. Take care.